And good day. This is the weekly technical update for the S&P 500 being recorded on Sunday, May the 19th, 2024. I am going to start here on the weekly chart for the SPX. And what I am bringing to the forefront today is the alternate count that I spoke of and now going to put into place to show you that it has a very strong potential of actually being the count in force. And what this count does suggest is that in January of 2022, instead of completing a primary fifth wave and the cycle degree third wave, that's dropped down to what completed at that level was the primary third wave. And then what's completed at October of 2022 was primary wave 4. Now I've done some fibs, and it really does come in at 0.382, down to that level. So that happens to fit with this particular picture. And then how I'm presenting now also begins to fit. And that basically occurred up here, where we're getting additional confirmation that it's likely a little bit larger of a move and therefore more strength to the upside. So back to the count. So under this count, we would be in primary wave 5, which would then complete cycle wave 3. So instead of cycle wave 3 not being complete and the cycle fourth wave being engaged with a primary B wave, looking for that top in the primary B wave, it has switched a little bit. Now, just so you know right away, I've left that Fibonacci level at 1.382, which would be where the target for a primary B wave, which in the SPX got touched on Friday. That level was 53.25. This is coming a little bit lower, but it's 53.25, and that was the high on Friday, was 53.25. And so these are kind of important in that I'm leaving it in because if the market really just decides it's going to start collapsing from here due to whatever, I have no idea. That's not going to be first in my, excuse me, on my list that I'd be looking for that, but that doesn't mean it can't happen. So again, the market is going to tell us, but I'm not looking for this, not even later today in Globex or tomorrow with our opening, leading up to what we got. Major thing coming up next week, folks, just in terms of earnings reports, is NVDA. More on that in a little bit. Now, getting back to this weekly picture, if indeed we are in primary wave 5 going up, what does that entail? It entails 5 waves of intermediate degree. So at best, as I can count this, I have a intermediate 1 and intermediate wave 2, which means we're still in intermediate wave 3 and still then need an intermediate 4th wave correction and an intermediate 5th wave rally. So that leaves plenty of upside left to do. So within intermediate wave 3 then, what's it consist of? It consists of 5 waves of minor degree, of which I've got minor 1 and 2. So here we are again, we are in a minor third wave, which is developing what's going to be inside. 5 waves of minute degree, of which we have 1, 2, 3, and 4. So with that in mind, what does that project up for us here? That we're in a minute 5th wave, which will consist of 5 waves of minuet degree, of which pretty much what I can tell so far, we've only finished minuet 1, 2, and 3. We're inside possibly of a small minuet 4th wave. We're still a minuet 5 to come, finishing then minute wave 5, finishing then into minor wave 3. So I'm now trying to color code my levels here to what the move that it's referring to. So in other words, here we have the minor third, which is already now exceeded 1.618, 2.618, and I could be adding 2.72. There are different levels that others use, but I'm sticking basically to the levels that are associated with Elliott wave, the Fibonacci levels associated with the Elliott wave, and how that broke down and how it was taught to me. So what I have up next within the minor degree, because of the height, the territory we've covered, is 3.618, and that's at 53.68. Now, so you can see it's kind of that orangish color, and that corresponds with the minor degree labeling. And the next is that this is the intermediate degree labeling, that's in yellow. So here we have that, and that would be 2.618, where wave 3 would be 2.618 times the length of wave 1. And we know that it's not going to contain this third wave because of where we sit within it. But it does still should present some resistance. So I'm going to leave it there. Now let's kind of start to break this down. So within it, we've had several things corresponding. We've had different things happening, basically here and then again here, where we had some breadth thrust indicators trigger, displaying that the market would continue to rise. Right now, up inside this move, we did have a stronger signal given a stronger bullish signal, so an upside signal cycle-wise. And the way the cycles are functioning, we have 3 and 6 month cycles that can fluctuate a day or two either side. We were looking for in the SPX or just in the S&P for a cycle low or a trough in the cycle to come in end of April, beginning of May. And that cycle came in early. And so if you do a right-hand translation, that presents more of a stronger upside picture, a more bullish picture because the cycle bottomed and now is running. It's running towards its peak, the cycle peak. After hitting the trough, we look for the cycle to peak. And that then brings us up to these higher levels. And so the index itself begins to present a more bullish or stronger upside picture. And then some of the components are also, when you break it down, their cycles are beginning to point in that stronger direction as well. So that all supports this primary fifth wave, and within it, this minor third wave coming to a completion, and therefore breaking 1.382, which was the marker for the primary B wave count. So in other words, if this was going to be the completion point for cycle wave 3, then I had cycle primary A, primary B. I'm looking for a cycle wave, not a cycle wave, a primary wave C down to finish the cycle 4. So what the alternate count does show us, or what the alternate count states, is that cycle wave 3 is not done. And we're still within the primary degree rally phase and still within the primary 5, which is the last leg up. So we break that down and we can see we've got cycle intermediate wave 3 still in progress. We have minor wave 3 still in progress, and we're down to the minute level where we can count that we're within that minute fifth wave coming up. Now, what do we have out that's really supporting this move? Well, we've not had the best in terms of economic news because inflation, the latest reports that came out last week, inflation continues to be very stubborn. And we're seeing it, and I think it just affects different parts of the country, but if you happen to live in the state of California, particularly Northern California, where we have seen our utility rates just go through the roof. So that's inflationary. We've seen gas prices jump up. That's inflationary. We've seen our food prices jump up. That's inflationary. But magically, how the government decides they want to report consumer inflation or even producer inflation, they tend to leave out energy and food in those calculations. Now, if we put them back in, and even with those either being removed or now being included, again, inflation is ticking up. It's not ticking down. But the Fed remains stalwart in that it is intending to meet its goal. Not sure how you intend to get there, with the current policy in place, but they don't want to break the back of this rally. They don't want, and for good reasons, because the economy is continuing to show that it is robust. What's being really stubborn, of course, is the fact that what produces inflation is not calming down. The sudden surge in utility rates, the sudden surge in gasoline prices, the sudden, and it's not even sudden, it's just been consistent in food prices. So it's really hitting the consumer, I think, much harder than it's hitting the producer. Now, producers got to spend more money, producers got to deal with wage inflation, all the rest of that, but still, there, and now we see via earnings, we have a lot of our larger, particularly the Mag 7, which seems to control everything these days, doing really well. They're producing good earnings. They're producing that they're making money. And I'm not just talking making a little bit of money. I'm talking about these bigger players are making billions of dollars per quarter. So it's still strong. And there's still enough money being put into the market, being shifted around within the market, that it keeps a lot of things going. We're not seeing massive exit because the end is near, so to speak. So while all of that fits together, it continues right now that we're breaking levels, that the cycles are now joining in and showing, nope, we got a very strong position going up, likely through at least June, and more than likely out to September, before we're done with likely intermediate wave 3 and we're jumping down into a stronger intermediate wave 4, or even just until we're done possibly with even primary wave 5, September, maybe even towards the end of the year. Now, what could break that back earlier is if inflation just does not give up. If we continue to see what we're seeing, then the Fed will have to react. I don't believe, me personally, I don't think that the Fed is just going to sit there and say, well, we're going to stick to our guns. We still believe, we still think that inflation is going to start to tick down, et cetera. We're still going to be on target, whatever the situation is. So that, I think, is what could eventually clip and turn and get this thing going in another direction, is something in terms of inflation or other things begin to flip and work against versus working for this positive sign that we had. And that may come, folks, with the top of the presidential cycle, which is a 4-year cycle, which has yet to really play itself out. Why? Because the election's in November. But it seems that we're screaming towards that high as well. And so many things are coming in that start to point to September, October, or towards the end of the year, even for the Fed. For the Fed to actually start cutting, they've now said, well, we might not have any cuts this year, or at least not until the fourth quarter. Well, guess what? If we got the cycle that's going to come in and it's going to show a stronger bottom, like a trough, into September, October, well, how's that going to fit in with this market that just continues to rally? I think that we will find out. So back to the Elliott and back to what I think can be coming forward under this count. Now, I am going to be looking for confirmation, but I think that confirmation is going to be coming very quickly, next week. And I think it'll be really wrapped around NVIDIA's earnings. So we're going to get a lot more clarity as to what degree of a correction we may or may not move into, or what degree of a rally we may move into to finish. So bringing it all down, that's the weekly chart. We have 3, there, 4. We're inside primary wave 5. We have, and then within that, we're inside intermediate wave 3 of primary wave 5. Inside of that, we're in minor wave 3 of intermediate wave 3. So here we are, the longest and the strongest section of this rally, and it is playing out pretty cleanly. Within minor 3, we are likely within minute wave 5 of minor wave 3. And where does that, let me bring this down quickly to the 1 hour chart. And where does that kind of bring us in? So here we have it again, minute 1 of 3, minute 2 of 3, minute 3 of 3, minute 4 of 3. And now we've got this rolling through minute wave 5, which will consist of 5 waves of minuet degree. Where we have 1, 2, and 3. So let's break this down one more time, put it on the 4 hour chart, and let's go inside. Come on, please. And let's go inside. So here we have ABC, and that's going to be the minute wave 4 right there. And here we have minuet wave 1, minuet wave 2, minuet wave 3, which came up and touched 5325.55. There it is. And the high was actually 5325.49. So right on the nose. Did it hit it? Stop. So if we're just going to be looking for a minuet wave 4, well, what's the most common? Most common is that it falls between 0.236 and 382, and that's right there. That's that small fourth wave. Looks a little bit bigger on the futures market, but in the cash market, it's right there. And that's what we'd be looking for this market to come down, ABC down, get into this area. 5,200, I believe, would hold. I think it'll hold above 5,200, but let me go down there and take a look, see what's going on. And then the top side is 5238. So the fibs are 5246 down to 5201. The internals, which was within the previous fourth of 1 lesser degree, suggest 5210 to 5238. So that's what I'd be looking for here. I'm bringing it down. Now, upside, again, the 2.618, that is for intermediate wave 3. I'm leaving it there because it should present some form of resistance, although I don't expect the market on an intermediate degree to stop there and finish in intermediate third. So don't think that. I believe we're going to get between 5358 and 5368 to finish minor wave 3, right? So this is minute wave 5, and I'll be able to, minute wave 5 actually projects up to 5446 to complete. That's just at 618. And I'm thinking probably going to come in here because we've got a little bit of a stiffer resistance band basis the cash market. So I'm looking for it to maybe get up towards it. It gets down, then I'll be able to put one more in the terms of this small first wave to wherever this fourth wave comes in. And I think that that's likely going to bring us again right up into here. And so this will take precedence over the fact that we're finishing 5 up. Again, that's always going to be the priority. Not necessarily the fib, but the wave pattern itself. If I can count up 5 and it's clean, and this is where we end up, then that would be the completion point for minute wave 5, and then also minor wave 3. And then we're going into a minor fourth wave correction. So ultimately, building blocks, remember, if we got minute 5 and it's going to be minor 3, then we're looking for a minor fourth wave. And again, just going back out to here, I need to go one more, go back out to here. Then what we're looking for is I'm going to be connecting this to wherever that fourth wave comes in. So the fourth wave is going to go from here to wherever this third wave comes in. And so you can see it's going to be a little bit larger. We'd probably be looking for something to bring the market back down to 48, down into those areas, and then rally again up to finish intermediate wave 3, come back down in an intermediate fourth wave, and rally again an intermediate fifth wave. So we have much higher levels. Here you can see 3.618, 4.236. These are the levels if they start to break. We have 2.618 right there at 57. We have, for the minor degree, we have this one here, but if it breaks, we've got another one up here, 56.35. So yes, and again, depends on what happens, what we got going on outside of all this. So things are not in bad shape in terms of a rally. Now, how does that fit in with all of the negative things we're getting about, you know, the market itself in terms of what of our economy? Well, the economy itself is robust. What the problem is the inflation, and it's not really fairly being uh, placed against all of the segments of our economy in terms of the people that are making a lot more money that, yeah, they feel it, but they have it to work within. So it's a certain segment of our workforce, of the population, that gets hit the hardest. And of course, it's always going to be those that are struggling to pay the bills. And so what we could continue to see, it's like if people are getting laid off, which they are, that begins to put pressure back on the Fed. Because if that builds and then we're showing a more negative and the inflation, and now we're going to have wage inflation and we've got this more people unemployed, yeah, that might take the inflation number down a little bit, but boy, I'm telling you, it is just a mixed bag of what can happen. Now, let's take a look on the daily. Let's take a look at our moving averages. As you can see, our moving averages are actually doing, oh, come on. There we go. Just doesn't want to do it, but I'm going to go right here. Moving averages, they're kind of flat, but they're basically all still pointing higher. This is the daily. There is the 13, there's the 20, there's the 50, there's the 200. No problems there. Now, if we start coming down in these larger fourth waves, then I would say that we might come back. But I expect this one to go totally flat as well as this one. Unless we come down and start to break it, then it'll turn. So that is the cash market. Let's go over and take a look at the futures market. Same deal. Coming down. Here's the 3. There's the 4. We have 1, 2, 1, 2. I know this will all adjust itself once I bring this down to my 4-hour chart. In fact, I'm going to do that right now. Okay, that didn't work. Let's go out one more. There we go. And let's go out like this. So we have here, there is the minute 3, the minute 4. We're in minute wave 5 coming up, and that has minuet 1, 2, and then we have 1, 2, 3, 4, 5, and that's not the 4. How about that? Not paying attention to what I put up there. That is the 3rd. And we're looking for that 4th wave now. Same deal. Here is that previous 4th right there. And it's within, here are fibs. Again, I'm trying to line them up. So color code them to the move. We're looking for a 4th wave. There's the support level. And here is the previous 4th to back us up. So we have the outside and we have the inside. Inside goes a little bit below that outside, but we'd be looking for it to come somewhere between 52.71 down to 52.24. Why they come out at 18 and 89, I find very interesting, since the futures market does not trade in pennies. It trades in quarters. So it either has to be 52.75 or 52.25, 52.24.25. So in any case, those are the levels that I'd be looking for a 4th wave. And then we still have a minuet wave 5 to go up to complete the minute wave 5 to complete the minor wave 3. Now, can that all happen down up to 53.58? Yeah, it could. But now I'm getting, we have the potential right now where the futures market is saying, well, it needs to really kind of go. But the fact that it comes down, it hits this, again, finds a support at which was resistance at 53.08, came down just below at 07. But that it was just completing a very small, like in other words, that this 3 would go up here, this 4 would come over here, and we still have a small 5th to do. And that could bring us back up towards that high at 53.50, and maybe even a little bit higher up to 58, which I have for the minor 3rd. So again, we're going to go down and we're just going to be playing against the actual pattern. If we get 5 and it's complete, we get a 4 and a 5 and it's complete, then it's going to be all done. So if I'm going to be putting this minuet wave 4 here, as it maybe comes down and touches this, or gets into the zone, if a 4 can go there and we get up there and get a 5, and we then make 53, 58 and complete it, then this minute 5 and minor 3 will be put into place. Otherwise, we have continued resistance, but in terms of, I would need that 4th wave to add an additional level that will begin to cover us this black hole here. But in terms of just this minute 3, well, it just starts to get explosive once it starts to really break above a lot of levels. So again, that's upside against the minute because everything else has been exceeded. So that's why I'll go back to, I'm not necessarily looking for minute wave 3, excuse me, minuet wave 3 to take us all the way up there. Now, one more that I can add. Let me go back out to my daily chart, and it's going to be minute. See if I can do it here. I can. Let's just go this way. I'm going to be adding here, and we're going to go here to here to here. So now bring it back down to my 4 hour, and let's see what this looks like. Yeah, you can see even minute, it's all the way up here at 50, 57. So again, I got to go on this internal wave structure. Minute wave 5, that would be pretty high. Now, can it do it? Sure, it can technically, but it's not what I'd be looking for. So I need to take a look at 618. Yeah, I want to put that all into the right color. And there is that. I don't need that one. And I definitely am not looking for that to get up that high. So let's see what this looks like. So now we have, again, 618 at 54.26. Now that makes more sense. So 1, 2, 3, 4, 5. If we get up to here, 54.26, now we're into that whole cluster zone. 53.43, 53.58, 54.26. That could be it. And then this gets pushed up just a little bit, but it could finish it here as well. So we have a big cluster, and they're all kind of matching up and starting to close the doors and to get this count finished. That's the S&P. Also, moving averages are all in place. Now, what do we got coming out next week in terms of economic numbers? Well, we have on Monday, we've basically got just a bunch of Fed people out speaking. On Tuesday, we have more Fed people speaking. On Wednesday, so no numbers yet. On Wednesday, we have existing home sales and the minutes of the May Fed meeting being put out. On Thursday, we have initial jobless claims, S&P Flash U.S. Services PMI, and manufacturing PMI, plus new home sales and one Fed official speaking. On Friday, durable goods, and consumer sentiment, the final. And then we have one Fed speaking. Midweek, on Wednesday, May the 22nd, we have the earnings report from NVDA. I am expecting fireworks off of that, one way or the other. I'm expecting fireworks. So let's see kind of what it all goes on. Nothing really intense coming from the market in terms of economic data. All right, so the next Elliott Wave update, and it'll be an Elliott Wave daily, would be on Monday, May the 20th.